What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Ryan Pulis here with another episode of the CPA Zone. Today we're going to talk about the benefits of making an S election and how you can save taxes on your business by doing so. So it's upfront to clear up any confusion. The standard S election, if you set up a corporation and make an election to be taxed as an S corporation, or if you're an LLC that makes the election to be taxed as an S corporation, it's the same thing in the eyes of the IRS. So once you have that S election in place, you're taxed exactly the same. Doesn't matter if you started off as a corporation or an LLC. Your business name will still have LLC in it. If you started off as an LLC, that's perfectly fine. The IRS knows once you make that election that you're being taxed as an S corporation. So I kind of get that question a lot. If it matters, do you need to start off as a corporation versus an LLC? And the answer is it doesn't matter. Either will work. Now, an S corporation gives us an opportunity to save taxes. And the way that happens, it lets you save on payroll taxes. So FICA, that's your Social Security and Medicare. That's assessed on your wages. So if you're a W-2 employee working for someone else, you still pay the FICA taxes, Social Security and Medicare. So half's withheld from your pay and your employer pays the other half, which is in their eyes, it's another cost of employing you. Or if you're self-employed, if you're the boss, if it's your business, you're going to pay it. You'll pay both sides in that case. And if you file your business on a Schedule C, like a single member LLC or sole proprietor, you pay them, they're generally referred to as self-employment taxes in this case. But that FICA is going to be assessed, Social Security and Medicare. And there's two sides, the employee portion and the employer portion. So when you combine both, that's a total tax of 15.3%. Now that's on top of the income tax, which can go to 37% at the federal level, and any state income tax, which varies state to state. The higher states, I think highest I believe is California still at 13 point some percent. Average state tax probably somewhere in like that 6 to 7% range. So it really adds up. So an S corporation it's a tax election that allows the net income from the business to escape those payroll taxes, FICA. It's only subject to ordinary income taxes. Now, the trade-off is the owner or owners must pay themselves a reasonable salary and be on payroll. So when you report your business, when you file your business on a Schedule C, sole proprietor, or an LLC taxed as a sole proprietor, every dollar of net income is subject to FICA or self-employment taxes in the case of a Schedule C. So with the S election, basically that net income is going to be broken into two parts. Owner payroll, reported on your W-2, and then the remaining net income after your owner payroll, which is reported to you on a K-1. You can take that out as a distribution. Now, only the W-2 portion is subject to FICA. The remaining net income is taxed at ordinary income tax rates, but escapes those payroll taxes. So that's the benefit of the S election. So as an S Corp owner, you can take money, you're basically taking money out of the company in two ways. Now, we're ignoring loans for right now, which would technically be a third way. But the first way you take the money out is your W-2 payroll, and the second's owner distributions. And you need to have a good balance there. There's no hard and fast rule. A general rule of thumb is you want to keep them at least 50-50. If your income's higher, you can get a little below that. But at the end of the day, you have to look at your salary and make sure you're paying yourself a reasonable compensation. What would you hire someone else to do this job for? What would you pay someone else to do this job? The IRS doesn't define reasonable compensation, but these rules of thumb come into play because if your salary is too low, it's flagged for an audit, you need to pay the reasonable compensation. Now, your distributions, when you take a distribution, it's a return of owner's equity. It's not a business expense. So you're taxed on the net income from the S corporation, whether you take any money out of the company or not in the form of distributions. The distributions themselves are not taxable. However, you're paying tax on that net income. So if you leave money in the business from a prior year, it's already been taxed. You take that out tax-free in a sense. Now, when it comes to making the S election, only an LLC or corporation can make the election to be taxed as an S corporation. A sole proprietor cannot. So a sole proprietor would have to go out and set up an LLC first, then they can make the S election. That's why, in our opinion, it's best to start your business with an LLC from the beginning. They're generally pretty cheap to set up. Now in California, you have that $800 fee it's an annual fee that you pay each year to maintain your LLC. So maybe if you're in California, you wait until you've got some revenue coming in to set up that LLC. Most states are not that expensive. Some are under $100. So now, when would you make the S election? When's the best time? So we'd like to see when your income levels, and this varies by your geographic location, but somewhere around 50K. If you're in a higher cost of living area where it's going to demand a higher reasonable or a higher salary to meet the reasonable compensation, maybe look at closer to 100K a year. So you want that net income to be at least in that range before you make the S election. And you want to make sure the expectation will be that it's going to maintain or continue to be in that range or higher going forward. So let's just briefly talk through a quick example. Let's say your business, single member LLC filing on a Schedule C, is generating $100,000 a year. So at the moment, all of that income is subject to FICA, 15.3% when you take the employer and employee piece. Now let's say you make the S election and we determine a reasonable salary is $50,000 a year. So you're going to pay yourself, the owner, a $50,000 salary, which is now an expense. That leaves the other $50,000 left over. It's going to come to you on a K-1. So you're still going to be taxed on $100,000 of income. $50,000 on W-2, which goes to your 1040 on wages, on the wages line. $50,000 on a K-1, which goes to Schedule E, and then it ends up showing up on the other income line on the 1040. You're still being taxed on $100,000. However, that $50,000 net income that's reported on your K-1 is not subject to self-employment taxes. So if we do the math, the FICA tax is 15.3%. We are now, rather than paying it on $100,000 of income, we're paying it on $50,000. So the difference, $50,000 at 15.3%, is $7,650 tax savings by making the S election. So only $50,000 on the W-2 is subject to this payroll tax. We're saving the same amount on the income coming on the K-1. $50,000 times 15.3%, $7,650. Pretty nice tax savings for a small business owner. Now, how do you make the election? To make an S election, you file Form 2553. You need to file it by March 15th of the tax year you'd like the election to be effective. So that's, if you want it to be effective January 1st, 2025, you would file the Form 2553 by March 15th of 2025. If you miss the deadline, let's say your intention was to make the S election, you put yourself on payroll, you missed the deadline. There is a late filing election. There's relief that allows you to file late as long as you're operating as an S corporation. And that also is also make that election on Form 2553. There's some wording you put at the top of the form, some boxes of the check, and some certifications you add, or some statements you add that you're certifying this is all true. Now, the S election or the S corporation does come with some additional administrative costs. So an S corporation files a totally separate tax return. Single member LLC, reported on Schedule C of your 1040. The S corporation is going to be filed on an 1120S. You're also going to have to start running payroll for the owner. If you already have employees, that's going to be a nominal cost to add the owner to this payroll. If you haven't run payroll yet, you're going to have to incur a cost for a payroll service. So just know there's some additional administrative costs, but bottom line, just run the numbers and make sure the tax savings are worth the additional cost. They generally are. They really should be. So a good way to think about it is the tax savings should cover those additional costs several times over. And that should tell you if it's a good idea, if it makes sense to go with that S election. And it's rare that they wouldn't. So this episode is actually prompted by a question that we had. So we had a question that came in from a client said, I just set up my LLC. I've been reading online. Should I make an S election right now since I'm just starting my business? And the answer to that is really, it depends. So if you have income right off the bat. Maybe you've got some clients lined up and in place and you've got income coming in right from the beginning and the tax savings make sense, then sure. Or maybe you bought a business that already has stabilized income. And sure, it makes sense to do that S election right away. If not, if you're bootstrapping and you're just getting started, maybe you're pre-revenue or you have a little bit of revenue coming in, then the S election is not going to make sense right away. So set up a single member LLC and then you make the S election later when your income gets to that $50,000 to $100,000 level, depending on where you are. So you can pay yourself a reasonable salary and you want that expectation of it remaining in that range or increasing. So that about does it for this episode on S corporations. We just covered the basics here. Your own circumstances are going to be a big factor in whether this makes sense. So make sure you're getting advice from a professional. I hope you found something valuable today in this episode. If so, please hit the like and subscribe button or leave a 5-star review. And until next time, have a great day.
This audio segment was edited by me, Adam Rothstein. If you would like help editing your podcast or narrating your audiobooks, please email me at adamrothstein29@gmail.com. That's ADAMROTHSTEIN29@gmail.com.
So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's THEPULICEGROUP.com/contact.